Hello, welcome again. This is Si Wing Yi. Today I'm going to go over the Redfin housing update for October 2022 for Raleigh, North Carolina and Charlotte, North Carolina. All right, so without further ado, let me share my screen and get it started. By the way, by the end of this video, if you find this video valuable, please smash the like button and also subscribe to my YouTube channel. And finally, you can also provide your email to my newsletter database on my website below, so you could receive free weekly real estate investing newsletters that could help you to create a real estate portfolio to achieve your financial goals and dreams. Thank you so much. And without further ado, let's go over the Raleigh, North Carolina. As you may or may not know, I've been reviewing housing market updates in many markets in the country. So if you look at my YouTube channel, you will know. So without further ado, let's go over the Raleigh, North Carolina, which is, let's go over new listings. The new listings so right now is around 512 transactions. New listings occurred this past month, which is still only 22% year-over-year reduction from 2021. By the way, the black line is 2022, the orange line is 2021, the red line is 2020, and the blue line is 2019 before the pandemic. So the new listings has decreased 22% since last year. And also let's look over the active listings. The active listings has increased throughout the year, and then it subsided, stabilized toward the last couple of months. So it's an indication that we are getting fewer active listings and fewer new listings as we are concluding this year. And with the mortgage rate going up all the way to around 7%, we suspect there will be less buyers demand and less sellers putting their houses up in the market, especially during the holidays. So we can expect this trend line going to decrease, not only for the remaining a mere 2 months of this year, but at the beginning, the first or even second quarter of 2023, we also expect the ripple effect of these decreasing numbers. And then, okay, let's go over the pending sales. The pending sales has been decreasing ever since the ending date, May 29th of this year, steadily increasing. At that time, during May, year-over-year, they were 12.65% pending sales for 2020, reduction from 2022. 2021 has higher pending sales than 2022. So that is a interesting trend. So if you see the trend for the following 5 months, to a point where right now, dated October 16th, there were only 362 pending closing transactions, which is a whopping 34% almost reduction of pending sales year over year from 2021 at the peak of the housing boom in the Raleigh, North Carolina market. By the way, Raleigh, North Carolina has been growing very, very fast for the past decade at least. A lot of the job growth and population growth. Furthermore, we have guiding our real estate investors for the past 20 years into this market to buy cash flow homes. So my ability to understand this market is very, very high. And we have teams on the ground that help our out-of-state investors to buy cash flow properties in Raleigh, North Carolina for many, many years. But now it's really challenging because the prices have risen so much, and the rent has also skyrocketed in this local market. But the numbers are not really making sense unless you put 40% down payment with the interest rate for investors around 8%. So it's very hard to cash flow at giving the price we're having here in Raleigh. But so we have to make some adjustments. I'll share that with you hopefully before the end of this video. So pending sales is decreasing That's pretty much giving. So let's look at the price drops. Really, I'm not gonna say I'm not going to over exaggerate this trend line. The percent of active listings with price drops is still pretty elevated to the point where it's 10% drop in list price week over week. But if you quantify that in 1 month, about 40% price drop from the listing. So it's not a severe, it's not something you should concern about, which this is happening all over the U.S., not just in Raleigh, North Carolina. So another important metric we need to go over is the median sales price. These are the very important metrics, obviously. So let's look over before the pandemic in 2019, the median price of a home in Raleigh is very affordable still at 294K. During that time, our investors did well from out of state when they buy these cash flow properties at 294K at like $1,800 monthly rent at that time with an interest rate around 4%. You can cash flow positive cash flow scenario situation. But right now, it's very hard to cash flow with 25% down payment because of the higher interest rate on the mortgages and the rent. Even though the rent has increased dramatically, it still has not caught up to the skyrocketing home prices that has occurred in the Raleigh market, which is good, right? Because you're seeing a lot of population and job growth in Raleigh. You have the Research Triangle Park, which is a very high-tech hub, is up and coming. And you have in-migration, people moving from out of state into Raleigh, North Carolina for quality of life, low affordable cost of housing, good business environment, and very fast high-tech growth market in the Research Triangle Park and the surrounding areas. So with the housing prices, median price is 291 back in 2019, then 2020, there's a 5% appreciation rate, right? Year over year from 2019 to 2020 with the pandemic just beginning at that time. Then you see a massive influx of housing activity and migration and remote work and people able to buy properties in very desirable areas of North Carolina, Raleigh. So the amazing skyrocketing of appreciation occurred between 2020 to 21 to the tune of a whopping 22% of home appreciation, which is mind-boggling. Then furthermore, from 2021 into 2022, year over year, back in July, we're seeing, let's go over the peak, which is August, the end date, August the 7th, another 18% appreciation from 2021 to 2022, which just makes a new median price for 447,000. So we're talking a median price of a mere 2.5 years ago of only 294K has skyrocketed insanely from 294K to 447K, which is an amazing appreciation growth. Then here's the kicker, and then of course, as we all know, the interest rate hike has really caused a lot of problems nationwide, but locally it's a little bit different with the Raleigh. So the peak price is 447, 18% year over year appreciation from 2021. Then you fast forward to now, October 16th report is down to 12% year over year from some at 427, from 447 to 427. There's a reduction of $20,000. So in the past 4 months, given the rate hike has increased so much, and the demand has bottomed out really from the buyers. This market has only a 5% reduction of prices. So it's still giving this information is pretty stable market, believe it or not. I as a result, these trends from this data indicates to me clearly, as you know, there's no crash whatsoever. That's not even, I would say there's a very slight correction. So yeah, it's very interesting. So this market is still doing very well. Once again, it's the low supply of inventory. with the moderate demand. In fact, let's look at the most critical aspect, months of supply, right? This will determine what kind of market it is. So right now, the weakest supply for 2021 is 12 weeks. So you divide 4 weeks per month, divide into 12 weeks, we're talking there are 3 months supply of inventory. What does that mean? This means that it's still very much a seller's market. Still, that means very low inventory, almost at a historical low, and with moderate demand, right? 7% has dampened the demand for the time being, but the low inventory 3%, which is if you compare to 2021, when there were multiple offers going on throughout 2021 in bidding war, and the weeks of inventory last year was around 2 months, as you can see, right? Almost 2 months. Now it's just barely over the 3 months. So still is at a very low inventory situation with a moderate demand. Again, 7% rate, the demand is subsiding, but who knows, right? In the next 12 months or so, if the interest rate is lower than 7%, then we will see some very positive transaction going on in the foreseeable future. Right, so that's pretty much it. Let me see anything else when you go over. Yeah, that's all you need to know. So my takeaway is for primary home buyers that are moving into Raleigh, it is still a very strong, stable market, believe it or not, which is, I can't say the same for other correction market in other areas. Real estate is local, as you know, based on nationwide. And for example, in California, I mean, we are seeing like a 16% drop in prices in San Jose, a 9% drop in prices in Los Angeles, and around 8% price drop in San Diego, and Austin, Texas, 16% drop in the past 5 months of home prices, and Boise, something I'm not sure. Also, Phoenix and Las Vegas, this boom to bust town, has gone through some more drastic price drops. But Raleigh is not so, which is good, for a lot of people. Okay, so I think that's pretty much I have for Raleigh, North Carolina. So now let's go over to Charlotte, North Carolina. Now, the reason why you see Mecklenburg County, North Carolina, is because Charlotte is in Mecklenburg County. Mecklenburg County have around 1 million people in this county in North Carolina, where Charlotte is part of it. Charlotte have almost 850,000 in population. So I try to find Charlotte under the on this Redfin, but under the metro category, but I couldn't find Charlotte, so I had to click on this category of county, and I found Mecklenburg County, which is pretty much the Charlotte area. So Charlotte, before I go any further, is kind of similar to Raleigh, which is Charlotte is like an hour and a half below Raleigh. So these two cities are one of the fastest growing cities in the south and southeast corridor. And so yeah, when people talk about North Carolina, people talk about Raleigh and Charlotte being one of the fastest growing area in this region of the country. So with that in mind, also Charlotte, I've been guiding our out-of-state investors to enter Charlotte for the past 20 years. So I understand the metrics and the market very, very well, obviously, because we have a team in Charlotte that are consistently helping our investors to buy cash flow properties. But it's getting harder to cash flow because the prices in Charlotte, just like Raleigh, has risen triple digits so much in the past 3 years during the pandemic. It's very, very hard to cash flow. So it's getting challenging there. So, but there are some pockets of North Carolina that investors can still cash flow that we'll talk about in some other time. Right. So with that in mind, so let's go over Charlotte. Charlotte is new listings has gone down, as in most housing markets in the country. At the peak is here back in June, and the transaction were very, very similar to 2021, in terms of new listings. But now, since the interest rate has skyrocketed to almost 7%, presently the new listings is only 345 transactions in October 16th. So new listings at a year-over-year drop of 21% compared to 2021. And then let's go over the active listing component, the metrics. And once again, the active listings are very, very similar with 2021, believe it or not, which is almost like only at 2% lower than what's transpired in 2021 during the bidding war of 2021, multiple offer situation, skyrocketing of home prices. So listings wise is very, very similar. The only major difference is last year, 2021, the interest rate were only like 3 to 3.5%, and today's interest rate were 7%. So the big gap differences in interest rate is causing a downward trend in demand in this housing market, no different than the rest of the country. But so we'll talk about supply momentarily, which is the critical component about this, the fundamentals of this market. So the next thing we're going to share with you are, let's go over the pending sales. Oh, they're not showing pending sales. What about homes sold? Homes sold, which has been decreasing, needless to say, based on the lack of affordability due to the high interest rate. So the homes sold in October is only 369 transactions, which is 21% less than 2021 year over year. So we're getting less homes being sold, we're getting less active listings and less new listings. So we're seeing a downward trend in terms of homes selling. Right now, of course, toward the back end of the year, the last 2 months is the holidays. People usually do not get involved in the transactions. They're very busy with the holidays and what have you. Price drops are really no different than any other market. Sellers, for those that want to sell, they are listed, the price is too high. Then giving the weaker demand, what have you, they have to lower their price. So they lower the price to the tune of almost 9% week over week, because if you quantify that on a monthly basis, is around 30-something% of initial listings has to lower their price in order to try to sell their houses. So let me see what else. Let's go over the median sales price, which is a very, very critical component as in anything, because it tells you about the health of the market. So median sales price, we were at the peak here in Charlotte back in June of 2022. The median price was $442. But before we go over that, let's look at the housing appreciation in the past 3 years, ever since the pandemic. Before the pandemic, the median price of a home was around $283, which is a very good price. At that price, investors can cash flow. John, they can rent the house for like $1,800, $1,900 at 3.5%. 2.5 years ago, they can cash flow with 25% down payment. But now, with an 8% investor mortgage rate, with $442,000, there's no way they can cash flow. Even if the rent is maybe $3,500, investors can cash flow, but you're not going to get $3,500 rent on a single family home selling for $442 with the rate interest rate being 8%. You need about 50% down payment. So the numbers does not look so good because of the rising, skyrocketing of home prices, right? I mean, which is good for those people that have the wherewithal to buy and to overcome the bidding war and be able to secure these homes. And then in the past few years, so 283. So from 2019 to 2020, there's a 7% appreciation rate in the Charlotte market, from 281 to 300K. From 2020 to 2021, there's a whopping 21% appreciation year over year. From 20 to 2021, the median price has skyrocketed to 361. Then from 2021 to 2022, another whopping 23% appreciation rate, and the median price becomes 442. So wow. So for those of you that are able to consummate the transaction, during the pandemic, you guys have made a lot of money with massive equity growth, which is historic. But then, of course, since the interest rate has skyrocketed from 3.5% or 4% a few months ago at the beginning of the year, now as a result of demand pullback with a higher interest rate, the median price has decreased quite substantially over the past couple of months and increased again during August and September. Now October 16, the new medium price benchmark is 416. So from 442 to 416, we're talking what? A little bit less than 30 grand in reduction of prices. So I would say, I'm not being precise here, but the drop in prices in the past 5 months as a result of the interest rate hike is probably around 6 to 7%. Nothing to be concerned about. I mean, it's going through so this market evidently is going through a slight correction. Is not as drastic as other markets in other parts of the country, such as Boise, Idaho, California, or Phoenix, or Las Vegas, what have you, or Austin, but a slight drop momentarily, nevertheless. So nothing to be concerned about. It's still a very healthy market. And finally, let's go over the month of supply, which is a critical key, right? Economics 101, if supply is lower than demand, then we can have appreciation market. So let's look at the week of supply, which is 10 weeks. So therefore, if you divide 4 weeks into 10 weeks, so we're talking like around 2.5 months supply. So what does it tell you? It tells us that this is still very much a seller's market. We are still seeing 2.5% month of inventory is very, very low inventory. And the demand, although it has subsided greatly, still pretty moderate. Moderate demand versus low supply, economics 101, this means there are not only there's no crash, there's really no bubble, no correction. We expect houses to continue to increase. How much depending on the interest rate. If the interest rate remains at 8%, we may have a very minor correction moving forward. If the interest rate gets lower to 7%, this market, Charlotte, will see a slight appreciation, maybe a single digit, 3, 4, 5%. So only time will tell. But the overall, this market is still is pretty good based on these metrics. Clearly, there's no crash or bubble. So just a slight correction, a temporary pause, a reset, if you will. But I foresee the big picture. Okay, let me stop sharing my screen. The big picture in Charlotte, because Charlotte is the number 2 financial services industry in the country. Guess what's number 1? Number 1 is New York City, Wall Street. Wall Street Financial Center is number 1 in the concentration of financial services growth, and Charlotte is right behind. It is a number 2 is a banking center. It's a banking center of the country. So giving the affordability is still low. The home prices are still relatively low compared to the other housing markets in the other part of the country. So Charlotte, just like Raleigh, this is my takeaway, by the way. My takeaway is that Charlotte and Raleigh is just really going to do a slight correction. So this means that the job growth and population growth is still steadily strong. You will still see a migration of people moving into Raleigh and Charlotte, especially from the Northeast, New Jersey, Connecticut, New York. Right, people will come down here because of better living conditions, lower cost of living, lower home prices, and better weather than the Northeast. And a lot of growth, long term especially. So I foresee this market will continue to do very, very well. And for primary home buyers, if you want to come down here and live here, which is a very good quality of life in North Carolina, And so here I see a steady population and job growth going on in these two markets, Charlotte and Raleigh, North Carolina, based on high tech growth, based on financial services, based on diversified economy, and people will migrate not from out of state, not only from the Northeast but from the Midwest and even California. People are coming over to invest here and to live here full time as well. Okay, so that's my takeaway from this Redfin October 2022 housing analysis of fast-growing Raleigh and Charlotte, North Carolina. So with that said, if you receive a lot of value from this video, I ask you again to smash the like button and also sign up, subscribe to my YouTube channel. And furthermore, to put your email into my newsletter database on the website below. Sign up for my newsletter on a weekly basis. You will receive great contents, great free real estate investing information, so you could help you to take your finances to the next level. So until the next video, every week you will see different types of housing market videos from me. And yeah, just stay tuned. Thank you so much for attending. This is Sirin Yi. I will see you on the next video shortly. Have a nice day. Bye-bye.